Excellent. Well, let us get started. Good afternoon, everyone. Thank you very much for joining us today for this webinar jointly brought to you by Grata and Alumni Ventures. What we'll be covering today is the modern corporate development tech stack. So if that's what you're hoping to hear, you're in the right spot. Our agenda for today, we'll walk through just on this next slide. Excellent. Brief introduction of our panelists here that you see on the screen. We'll talk a little bit about kind of the nature of or the situation as corporate development is kind of playing catch up in the industry at the moment. We'll go through the deal funnel and sort of the steps in the process that are required. And then we will absolutely leave some time at the end for some Q&A. As you'll be familiar with the Zoom format, there is also a Q&A function that you can start adding questions as we go. More than welcome to drop those as we go through some of the materials. So with that, we'll skip over to the panel itself. Let me start by introducing myself. So for those of you who don't know me, I'm Ludwig Schultz, one of the managing partners here at Alumni Ventures. We are a roughly $1 billion venture capital fund. We invest across stage and sector, including into awesome companies like Grata that are growing fast and changing the world. We do invest on behalf of individual accredited investors. That is the approach that we take to the market. So with that, let me hand it over to Nevin, please.
Ludwig, thanks for the introduction. Everyone, great to meet you. My name is Nevin Raj. I'm one of the co-founders and the COO of Grata, and we are the leading deal sourcing platform. Excited to be here and to have two amazing panelists with us today. I'd like to first introduce Alex Fries from Progress Software.
Hi, I'm Alex Fries from Progress Software. We're an infrastructure software provider based outside of Boston, Massachusetts in Burlington. We are executing on something that we termed the total growth model, where we're executing on an aggressive M&A strategy. And that's my role at the company is helping with and leading those transactions. Aaron?
Yeah, hello everybody, good afternoon. Thanks Ludwig and Nevin for having me here. My name is Aaron Polack. I am the head of business development for Lion Equity Partners. We are a Denver-based middle market private equity group, focused group focused on corporate carve-outs. So we almost exclusively focus on acquiring non-core, relatively orphan divisions from larger entities. I've actually been with the firm for 15 years now, and in my prior life, I was an investment banker with JP Morgan in their mid-corp group. And, look, I think given our focus on corporate carve-outs, you can imagine I've been working with corporate development professionals pretty extensively over the past decade plus. I do quite a bit of stuff for Corp Dev. I produce annual corporate development trends and compensation and benchmarking reports. I have a monthly corporate development spotlight newsletter that features interviews and interesting resources, job postings, all kinds of fun resources for Corp Dev professionals. I'm also on the global board of directors for an M&A association called ACG, where I help lead corporate development programming, including strategic acquire summits and roundtables throughout the country. And I guess as a selfish plug, I'm going to be chairing ACG's largest conference in May of 2023. It was a conference formerly known as Intergrowth. We're going to be changing the name and brand here in the next couple of weeks. But we're going to be featuring a strategic acquire summit as part of this conference on the first day. And then the second day is going to be a full day of deal sourcing with investment banks, private equity, et cetera. So hopefully y'all, at least have a handful of you can make it out to that. Should be a good event. So anyway, Nevin and Ludwig, great to be here.
Thanks, Aaron. Very exciting. I'm actually working pretty closely with Aaron on some of those initiatives to bring together this community in person in a few months. So on that note, as you see, we have two great panelists here. I want to frame the conversation before we jump into the panel discussion on what's happening in the world. Why are we bringing together the corporate development community today? And it starts with what's actually happening in private markets, specifically in private equity. So most of you in Corp Dev, you've seen increased competition, and you've probably seen this from more private equity firms, more financial sponsors out there bidding on, getting in front of good companies, assets that are attractive to you as well. And this is no coincidence. The amount of dry powder and uninvested capital has reached an all-time high of nearly $4 trillion, and the number of deals that are happening are just going up and going up. So that means there are just more and more companies, whether those are private equity firms, growth equity firms, VCs, family offices, others, going after the same deals as corporates and willing to pay more and more, so that it's almost become neutral between the multiples that a sponsor pays and the multiple a strategic pays. And that's caused the need for better technology and changing the way that you do business development and do deals. In fact, I love this great stat here. Average PE diligence takes 3 to 6 weeks. PE firms and sponsors know how to move fast. The average corporate deal can take 6 months to a year. You go through 1, 2 board meetings. Spaced out can take half a year. You have to get business units involved. M&A and corp dev teams have to actually execute the transactions. This time can be the time that can make or break a deal. So what we're going to talk about today is we're going to get into how technology is used. And what's happening, again, in that analog world of financial sponsors is more and more are adopting technology. In fact, a survey that was run by S&P says that 60% of PE firms are using machine learning, around 57% are using AI in their investment process, whether that's through third-party products or in-house efforts. And this number, while striking to me, when I really thought about all the parts of the process and all the technology that's percolated into the sponsor universe, was not that surprising when you really think about it. So what I want to do right now is I want to actually open up a poll to everyone in the audience. And this poll, I just launched it now. Would love for you to tell us, what tool do you use to manage your contacts and deal sourcing or pipeline data? So we have 25 responses so far. We're up to 36 out of 48. I'm going to give it 30 seconds here. And a question was asked about slides. We will provide the slides later, so you'll have those in your inbox as a follow-up. Okay, we have 39 responses. I'm going to end the poll. I'm going to share the results. So as you can see, not too surprising, about half of us are on Excel, and another third are using tools not even shared in this. There's a very, very long tail, and Salesforce comes in number 3. There's a very long tail of other tools that are used. In fact, some of the deal tools like DealCloud, Modaxo, others are sitting at under 10%. And I'll let Aaron talk about what he found when he did a broader survey of a few hundred different corp dev professionals and some of the findings he found with some in-depth research.
That's great. Thanks, Evan. I'm just taking a look. I think on first blush here, it's actually fairly close to what we found in that report that you mentioned. So earlier this year, just for some context here, in January and February of this year, I polled, it was about 728 corporate development professionals, on a slew of data, but really capturing data, measuring M&A activity, trends surrounding corporate deal origination, acquisitions, divestitures. And then I also did a pretty robust and a detailed compensation benchmarking report for corporate development professionals. And honestly, after assessing all of that data, some of the most remarkable findings was surrounding kind of our topic today, which is corporate deal origination, everything from volumes, their approach, and more specifically tools that corporates are using. So you'll see on the slide there, I'll get to that slide in a second, but another really interesting stat was 82% of corporate deal makers reviewed less than 50 acquisitions in last year, and about 65% reviewed less than 25 deals. On top of that, only 28% categorized their deal flow as high quality. And I think about our own deal flow and talking to a lot of my private equity business and business development peers. I mean, we're a relatively niche shop with a small group, but we review hundreds and hundreds of deals annually. And many of my BD peers, see significantly more, in the thousands. So comparatively, it's a pretty interesting gap. But the chart you see in front of you, mirrors fairly interestingly to your results there, but 57% of respondents use Excel spreadsheets to manage contacts and deal data, and only 12% are tracking deal data at all. Again, comparatively, most of the PE world is using sophisticated CRMs for relationship management and deal tracking and other software and tools to capture significant amounts of deal data and being really systematic in our approach to deal volume. And I guess one other comment is I think about processing some of the slides that you mentioned earlier, Nevin, looking at what's been going on in the PE universe and kind of this adoption of technology and tools. I think it's part and parcel, in my own world, kind of the evolution of the business development function within private equity firms. So, 4, 5, 6 years ago, these trends of the amount of capital to be deployed and really the competition with deals really spawned a pretty large increase in the BD function within the private equity universe, to the point where I think almost every private equity firm I know has a dedicated business development function to go find deals. And as these BD professionals have filled these seats for a few years, I think we're really in this next phase of evolution, which is how do we create systematic deal engines, right? Utilizing tools and tactics for contact management, target identification, and really improving how we prospect and nurture relationships with business owners, intermediaries, et cetera. But even more importantly, how do we establish and capture deal data and utilize funnel KPIs and other performance analytics? And personally, what we've done at our firm, we actually utilize a CRM called Deal Midas. It's actually not one of the big ones like Deal Cloud or others, but the reason I like Deal Midas, it was really nimble. We were able to use and actually work with their CTO to have really nuanced levels of data and reporting. So we have a lot of bespoke custom reports. So look, we've been able to utilize this and really track kind of 3 main buckets of data within our CRM. And the first bucket is really deal specific data, right? So everything that you'd normally think of, revenue, EBITDA, industry, geography, those types of things. But I also have done a pretty solid job of recording all of our sourcing data, right? So where the contact's coming from, their company, firm, is it proprietary? Is it from an auction? And what's our contact strategy? Was it outbound call? Is it inbound? Is it from a person meeting? Is it an industry conference? Maybe it's an ACG event, marketing strategy, such as our newsletters and reports. And I also track a ton of funnel data, how far the deal progresses, whether it's, we reviewed it, EOI, management presentations, submitting an LOI, did we execute and actually go exclusive and close deals? And by utilizing the technology within the CRM and these dashboards that we've built off of it, it really allows us to be really dynamic in the analytics and say, hey, look, this is where we've been really efficient in sourcing deal, and this is where we should spend less time. So again, I think the report is part and parcel and kind of an evolution of what's going on in the private equity world, but also kind of highlights a chasm between what we're doing in the PE universe and I think where corporates might be at this point. So Alex, I don't know, I'm sure you guys are certainly sophisticated and doing many different things, but I'd love to see what you guys are doing if that compares.
Sure. And so, yeah, I could speak to what we're doing at Progress and to my experience. We are using a tool you mentioned, Deal Cloud. Many similarities to what you said. I would say we use it for several different, there are several use cases. So one, keeping track of our most active deals, that's only a few opportunities at a time. It's helpful, but I wouldn't say that's the most valuable part, but that's probably the most critical and on the day-to-day. But where I think we get a lot of value out of Deal Cloud is in managing our pipeline. We look at hundreds of opportunities every year. So keeping track of what the company does, financial metrics, product and technology elements, where we source the deal from. Is there a banker representing the opportunity? Was it proactive outreach? How did we come across them? So just keeping all of that in line is very valuable. We also use it as sort of a file and document database. So as, whether it's an NDA, a teaser, SIM, different documents become relevant to different opportunities, we will store these in Deal Cloud. One, it's a great way to share them in a sort of a single spot for the team, but also it just helps with organization. And I would say one other thing we use Deal Cloud for in our deal CRM that's helpful is even if a transaction closes that we didn't do, or maybe we looked at it, maybe we didn't, or VC funding rounds happen, even if we weren't necessarily directly involved, but it's in our space, we like to track what's going on in the broader infrastructure software industry. One, just because it's great for our knowledge, but two, we include that information in our board decks and like to share that with our board members, but also the business unit leaders, just to keep them abreast of what's happening in the M&A market. So I would say those are the main things we use DealCloud for, and it's a very helpful tool. And I'm glad we're using it. And one other point I just thought of that I'll mention is there's a very helpful PitchBook integration. So you can actually bring data if you have a PitchBook subscription into DealCloud, and that's valuable. PitchBook's a great data source, and so having that is very helpful and actually saves a lot of time from manually entering data into DealCloud.
Aaron, Alex, thanks. It's really helpful to understand your infrastructure and how you've set up your deal origination and deal sourcing programs around more than just Excel. But what I want to jump into now is I want to talk about the deal funnel. And specifically, today's focus is going to be on the top of funnel. We're not going to talk about the IOI, LOI, due diligence stage. We're going to talk about how do you do business development? How do you find new opportunities? And we're going to start off with market mapping and company list generation. And we're going to go down and talk about reaching out, meeting scheduled, and follow-ups. So to start, let's talk about the market mapping phase. And actually, Alex, I want to kick this one to you. I know you use a handful of tools and different technologies. Can you tell us a little bit about how you actually map your universe of infrastructure software?
Mm-hmm.
What's the suite of tools that you use and how you use each?
Sure. Yeah, so that's actually something we've been working on for the last year, is building out a really, really comprehensive map of the infrastructure software market. We've broken that down into 6 large categories, and within each category there could be 10 subsectors. And it's never ending. We never stop mapping because new companies are always being created, gaining scale, ownership's changing, so it's always evolving. But I would say we use a few tools. One is Grata. We run searches on the platform all the time. We share those with our business unit leaders for feedback, and are always incorporating new companies we source through that method. We use PitchBook. We look up companies there. We find them in that database as well, similar with CapIQ. We also leverage Gartner and IDC technology industry reports. We, as a corporate development team, review those reports and incorporate the new companies we find, but also there are tons of product managers working at Progress, and as part of their role, they're understanding the competitive landscape. And so as they research their competitors in the various areas where they they work, sometimes they'll kick companies to us and say, this is a new company we recently came across, and here's our thoughts on them. So it's a very holistic approach from various sources of databases of people within Progress, and also external people at investment banks that as well are always telling us about different companies. So many sources.
Alex, and a follow-up to that, what you're describing sounds like a pretty typical stack in the sponsor universe, and actually more sophisticated, more built out than we've heard from most corporates. Can you tell us, going back to Grata and Capital IQ and PitchBook, how do you use those different tools differently? And what value does each provide as you look to map your markets?
Sure. So I would say they actually each have their own strengths. So Grata it's a really powerful search engine in that, let's say we're looking for companies in the application performance monitoring space, a super specific area of infrastructure software. We'll just type that into Grata, and using their technology proprietary methods, they'll scrub the universe and come back with a very lengthy list of companies that operate, in that sector. We'll then take that list and share it, disperse it within the corporate development team here at Progress, but also more broadly within the company. And so that's a great way to find new companies based on technology product area focus. PitchBook is really helpful for financial data, in my opinion, particularly as it relates to private companies. So they have terrific data on VC rounds, private equity, valuations if available. And so that's something we really value from PitchBook. And CapIQ is also a valuable tool. I think that their public company data is actually their strength. And so if we're evaluating potentially public company acquisitions, or we're screening for public company targets, that is where CapIQ really is the most valuable.
Yeah,
Alex,
just to follow up on Alex, similarly, right, we're using CapIQ and PitchBook, especially as we're looking for corporate carve-outs, right? CapIQ has a ton of great public data, but we start getting more nuance and trying to fill in the gaps, right? As you mentioned, Alex, Grata does a great job of kind of web crawling and finding interesting things on websites that doesn't show up on some of these larger searches. And one of the things we found with Grata is pretty interesting is the ability to search for like certifications or IP or other similar things you might be looking for that might not pop up in a business description that might actually pop up on a website. So we had a portfolio company that was SAS 72 certified, right? And typing that into CapIQ usually doesn't pop up, right? So, I think you're right. It's an amalgamation, and kind of when you're turning over stones and you're trying to widen the top of that funnel, you have to have a kind of multifaceted approach to business development. And then we utilize the technology in order to kind of coordinate and quarterback all of that, right? So you use all these different sources, and then we use our CRM, our Deal Midas, that integrated platform to make sure we're quarterbacking that appropriately. And one other thing I thought of too that we utilize, LinkedIn is a fantastic source for contact database, but even more so we use, and maybe some other folks use this, but I use the Sales Navigator function within LinkedIn. And look, that was built for sales reps, right? But I found it extremely useful for generating contact leads and following target companies. So you can earmark and track leads and group them into specific industries, companies. You can follow their job changes, posts, et cetera. And then the system will also generate using kind of machine learning, kind of the Netflix model, right? Depending on what you're seeing, who you're targeting, who you're asking, and who you're following, they'll start giving you suggestions on companies and people to follow. So that's another tool that we've been using. It's not that much more per month to use the LinkedIn Sales Navigator, but just another tool that we've used as well.
Very helpful for juxtaposing the different tools and talking about a multifaceted strategy. Just one more question though. We've heard from a lot of people who are on Excel that they also use Google search, and they're also on Google all the time. Alex, do you want to talk about your experience in your world pre and post Grata? So before, when you were on Google, and then as you moved over to Grata earlier this year, and how that searching has changed?
Yeah, I would say that it's night and day, honestly. Google is not built for deal professionals, and so Grata is obviously a tremendous search engine for many reasons, but one thing that I like about it is there are many different ways to search. So in addition to searching, like I mentioned earlier, by product or technology focus, they have a really valuable feature, basically where you search for a similar company. So you just type in the name of company A, and then they give you a list of 20 to 50 plus, depending how many they find, I guess, but usually 20 to 50 companies that they feel are similar. And it could be similar because of the product or technology fit first, but then there are also additional filters you apply that you can further refine their suggestions based on employee headcount, estimated revenue, funding, various inputs. And so I think that's tremendous functionality that you wouldn't have in a Google search. So it's been great.
The next question, I want to kick this back to Aaron. So we want to talk about how you actually use data to evaluate a company outside in. So Aaron, the question for you is, as you're looking at various acquisition opportunities, how do you actually go about figuring out if a company's qualified and the right fit for you? What are the different data points you look at?
Yeah, good question. So look, we have a pretty niche focus, right? So from a transaction perspective, finding that carve out is kind of paramount, right? But as I think about the different nuances of searching for a business, right? Oftentimes we are somewhat thematic as well, right? So we're looking for certain products and services and understanding, are they differentiated? What's their corner on the market? So having a solid business description and understanding of the service kind of function of that business. Also the size, right? Sometimes size is hard to find, so we triangulate that sometimes, whether it's using databases or technology on public information, to find revenue, EBITDA, margin profile, but oftentimes it's employee count. So I actually use LinkedIn. I'll look at companies' employees counts. That's usually a good sense. Most people are pretty active within LinkedIn and kind of know if they're an employee of something. So I actually get a lot of my employee count data from LinkedIn on that company. But we also look for certain certifications, and honestly, most importantly for us, it's ownership, right? Is it owned by a larger entity or a private equity firm, and more importantly to us, how do they come to own it? and how long have they owned it, because that helps us when we start angling for, being the next owner of that business. So to us, we utilize a lot of those data points, and then we pull those in from a bunch of different sources, and then we've built a custom dashboard to track a lot of these metrics and data that we're searching for, and then helps it process compared to what has gone through our deal funnel previously and what has been successful. So we're able to mirror that with the dashboard we're using and the data that we're processing, kind of concurrently. So.
Really helpful. Alex, how about you? What data points do you look for?
Yeah, so I think from our perspective, the first thing we look for is it a product fit? We have in our mandate for deals, we actually can be pretty loose as long as it's within infrastructure software and helps companies to develop, deploy, and manage business applications. That checks a box. So first, we want to make sure the strategic rationale makes sense. So business descriptions, like Aaron said, is very helpful. That's probably number one. Then I would say we have a set of financial parameters and guidelines that we look at, and we're pretty disciplined when evaluating these targets. And if they don't check the majority of these, we tend to move on pretty quickly. But we look for businesses with over 20 million in revenue that are break-even profitability or better, that have over 70% recurring revenue, low professional services, and over 90% net retention rates. And so we really look for those points. We have a one-pager that we share with constituents, bankers, and people that we talk to a lot, so they kind of know our parameters, and we try and get that out there so that we can be as laser focused as we can when opportunities come our way.
And one place I want to double click on is this notion of revenue estimates or employee counts, because the vast majority of deals you're looking at are private companies. And you mentioned in Cap IQ, you get great public company data. In PitchBook, you get data on venture-backed and private equity-backed companies. But how do you actually go about estimating a private company's revenue without actually having a conversation with them first?
It's very hard, obviously. I know Grata has a great function in their product where they provide a revenue estimate. So we will look at that. There's also various online estimates that we'll sometimes consult. Sometimes we'll use headcount as a proxy for that as well. I will say that I guess it's obvious, but the best way to find out is by talking to them. So we actually employ a third-party business broker that has a team that does some of this legwork for us, and they'll screen hundreds of companies for us. They'll keep reaching out to management teams, and then they'll share the ones that fit our criteria back with us. And we have maybe every 2 weeks we have a sync with them to get updates, and they'll gather that data as well. So again, many sources, some data, some software solutions, some real people interaction.
Yeah, Nevin, you nailed it. That's probably the hardest metric to find, right? Is an accurate revenue number. I mean, look, we look in Cap IQ, PitchBook, et cetera. Even with our targets being, the seller being a large corporate, some of the smaller divisions that we're looking for are usually inaccurate. So sometimes they're publicly announced, and oftentimes those divisions don't have any revenue data. So it's the Cap IQ has it, it's a best guess estimate, or it's pretty stale data. So we do triangulate using employees and other things, but it's trying to find cast a wide net and then using a screening process, right? So we have a business development team of 3 people. We're out there constantly having conversations. That's the best, obviously, source is talking to that company directly, but it is, not an accurate science, but it's just, hopefully you kind of narrow down the herd to the point where you're actually having pretty useful conversations. But yeah, you gave a good one, because that one's tough to find.
Yeah, I figured that's the question on everyone's mind. All right, well, I want to move on to the next part of the discussion, which is you have your market mapped, you have your list made, and you have to actually reach out, because what you both said was it's really important to have conversations and understand data and information from the company itself. So why don't you tell us a little bit more about how do you actually reach out to companies? How do you actually get in touch with CEOs and founders and business owners?
Yeah, so I would say the best way that we try and do it is actually through referral. If we don't know them, we have an extensive network of investment banking contacts at all of the major US banks in their technology, software, coverage groups, infrastructure, if they have that specification. And sometimes we'll go look up the management team, the CEO on PitchBook, which links to their LinkedIn, and we look for mutual connections there. And then we ask for a referral, whether it's from a banker, ideally, but if it's a private equity or VC investor, that's a mutual connection. That's also viable. A lot of times the business unit leaders within our company also have an extensive network externally. So sometimes they'll know the management team at a potential target. And so the best way is to go in through referral and relationships. If that doesn't work, we will leverage usually the PitchBook contact data and send out a highly specific custom email asking to have an introductory call, explaining why we think there's some strategic value to having the conversation, and ask if they'd be available.
Yeah, I think you hit it, Alex, right? It's finding that bespoke kind of curated message, right? And taking a step back for us, we really lean on our technology, the CRM and deal pipeline management tool that I mentioned before. And within that, there's a lot of functionality in tagging, different contacts with a slew of different tags. So everything from types of firms, professionals, different strategies that we should be reaching out to these folks or not. And then we help kind of put them into different subsegments. So we have a pretty massive database. I think we're over 40,000 contacts of the people that we reach out to pretty regularly. In order to do that, we have to tag and then carve up and taper that down to specific messages. So whether it's our investment banker universe, maybe even more specific industry bankers, and having more of a targeted message. So that's a key point. Is it's great to build this large database, but if you don't utilize it appropriately, by tagging and kind of carving out more bespoke kind of curated messages, then you're going to fall short there. So that's a huge focus for ours. And then that's for our portfolio companies, finding new platforms. When we have a business that we own and we're looking for add-on acquisitions, which probably better mirrors what Alex is looking at and a lot of you all from a corporate perspective. Look, we use LinkedIn quite a bit, right? That sales navigator function. We have a small list of maybe 20, 30, 40, 50 targets that we think would be really accretive acquisitions. And we'll start following them on LinkedIn, understanding what types of industry conferences they're going to, publications they follow, those types of things. So, we find a targeted industry conference that we'll make sure we go attend. So we utilize things like LinkedIn to help kind of really, like I said, thin the herd down to specific folks we want to talk to and then figure out the best way to interact with them and the best locations.
Have either of you done automated emails? You talked a lot about specialized, customized, specific emails, and we've heard a lot in the sponsor universe of sending automated emails and sequences out. Have either of you utilized that, or why would you or would not utilize automated emails?
I've never done, we do not do automated emails. We have not run campaigns. We like to be very personal. And so that's not something we've explored.
We have a little different approach, right? Because a lot of our main contacts are bankers and other things, right? So we do a couple different strategies. One, as I mentioned, we have a monthly newsletter. So we utilize things like constant contact, et cetera. The reason I use that is because we can track all the data, who's opening, who's clicking on different links, et cetera. But we try to be much more curated. If it's something more specific, like a deal announcement or something like that, and you want to send a more personal message, we have used mail merge out of a Word function. But we try to be more specific, unless it's a marketing document. If it's targeting a potential acquisition or investment, it is much more targeted. So, but things like marketing oriented communications have gone through either mail merge or constant contact for us.
And this one's for both Alex and Aaron. A lot of folks, and probably who are in the audience right now, haven't done targeted outreach and haven't thought about going to companies directly via outbound efforts. And when they first do, they get an email response rate of 30, 40%, maybe even lower. And they wonder, hey, is this working? Can you help provide some benchmarks of what you've seen of what to expect on response rates and engagement rates?
Yeah, I mean, I'll jump on that one. So, I think, look, like I said, we don't do a ton of email campaigns unless it's something more specific like advertising, right? So, but like from an engagement perspective, in many of our email campaigns, or if we're reaching out to bankers, et cetera, it's usually targeted and it has an action item to it. So we usually get pretty large, I think relatively large kind of response rates and hit rates, because most of our communications have an action item to them. So that's a key part of ours. But Alex, I don't know if you have different thoughts, but I mean, we're usually not, other than
Yes.
marketing materials. So
Yeah, I wouldn't say we do necessarily campaigns or automated, but I will say that a lot of times when we do proactive outreach, we don't always highlight necessarily what's in it for us. We like to highlight what's in it for the company. So in addition to being, we're the M&A team at Progress, but we have a very large bench of highly technically proficient technologists and, thought leaders in technology. And so we like to offer up calls with some of our product teams, our go-to-market teams, and really like to offer those connections so that they could serve as sounding boards, advice, work together, maybe think through partnerships, joint venture opportunities before discussing any M&A. So we like to be a resource for these companies, especially during the initial discussions, as a way of building a relationship. And then as time progresses, sometimes that'll advance to M&A discussions, and sometimes it won't. But highlighting that we could be a resource, and then also highlighting our successful track record of executing on M&A and taking really good care of people and product is another way of kind of building our validity in the eyes of the management team at these companies.
yeah, my best advice as a BD professional is find a specific audience and then deliver as much value to that audience as possible outside of actually asking what you want, right? So I mean, we target divestitures, but I spend most of my time connecting with the corporate development community, right? Whether it's on resources or putting together events through ACG, et cetera. Oftentimes, we have a pretty large investment banking network as well, and knowing that most corporates are falling short on origination volumes, we spend a lot of our time being connectors, right? Finding the right banks to connect with the right corporate development professionals. And behind that too, I try to connect really good corporate development teams who are looking for talent with folks who are looking, and vice versa. So, my best advice is always be a connector within a larger community that you're trying to build relationships with. So whether it's through emails and other things, but mostly just being a connector for things that are really relevant to them as a professional, or even personally. So.
Love that. That's really great to hear that both of you are targeted and realize the value of providing value to the person you're reaching out to, and that is something that can get a much higher response rate than what's in it for you. So on that note, I want to move to the next section around follow-ups, because deals don't get done with one email, one meeting. Can you talk a little bit about how you actually manage a relationship and nurture a relationship over time? What strategies do you use? What tools do you use? Just generally talk about the process here.
Sure. So I think to manage follow-ups and strengthen those relationships, we actually leverage DealCloud here. DealCloud has built-in functionality that you can tag in your reminders or alerts specific companies and to-dos within the system. So you could put into the system, had a great meeting with so-and-so, remind me in 6 months to reach back out. And so, and then that'll send an automated reminder to the corporate development team. When we do that, we like to, if they may have had an initial conversation with just corporate development, we'll reach back out with a business unit leader and, use that secondary introduction to further their, relationships within Progress as a way to enhance relationships. Also just asking for general updates on the business, keeping notes on what we discussed previously. If they said they were going to be executing on some sort of product enhancement or change to the business, asking how that went, and if they saw the desired result, is really how we build relationships and continue to stay updated.
Yeah, I'll double underline that. We really leverage and lean heavily on our CRM, right? Our Deal Midas tool. It's almost imperative that we utilize that. So, I mean, every contact has, their information. We pull up a module. I mean, you could call me right now. I can pull you up within seconds while we're talking live, and know when we talked last, when we had dinner last, when's our next follow-up? Have you showed me a deal? Is there a deal pending? All like immediately. And we have an app that we use as well. And it automatically sets calendar reminders. If you tell me that you might have a deal in 3 months, I have it in my calendar to follow up with you in 3 months, right? I don't know how I'd live without it, to be honest with you. I mean, we had previously used Excel, and it's really clunky in order to find that type of level of information. And candidly, be able to do it live and in person is just seamless, right? So the ability to follow up, because you're right, things don't get done. It's nurturing relationships over an amount of time. The ability to speak on that relationship, having that information kind of readily available is really critical on how we do business.
Last question before we move into questions from the audience. On average, how long would you say it takes that you've seen from point of first contact to talking about an actual live transaction or deal?
I would say that it could vary greatly, and it depends where in the company they are in their life cycle. So I've had ones where we'll reach out and they'll say, "Oh, this is perfect timing. We were just thinking about this. The founder is ready to retire, and I was just thinking about this yesterday. So let's get right into it." I've also seen where it could take years. When I first came to Progress, there are companies that we've reached out to, say at the very beginning of my time here, and we continue to have these ongoing update calls, building relationships. When we're traveling to their area, maybe we'll stop by for a meal and get an update, or vice versa. And it may not ever happen. It might happen next year. It may happen in 2 years. So it completely varies by the deal. Bootstrapped companies operate typically slower, in my experience, than VC-backed companies. They tend to have a very specific timeline of when those investors want to exit. And so using various tools, we could kind of tell when that will be. But we also look at a lot of bootstrapped companies, and it can vary greatly.
Absolutely. I couldn't second that more. I mean, it's a complete mixed bag. I wish there was more of a science to it. But I've literally called somebody and made an introduction, and we had a deal. We closed a deal 2 months later. That rarely happens. That's a little bit more the lightning in the bottle scenario. I wish that was more the case. But oftentimes it's months and years, right? I mean, I've also reached out to people, over the course of 3 years and never heard back. And then after the third year, they had a deal for me, right? So just because sometimes you're not engaging with somebody live doesn't mean you're not hitting their radar as well. So we'll continue to reach out to folks, whether it's for our portfolio or for new platforms, but it is a complete mixed bag. And I think it really emphasizes the need to widen the top of the funnel, right? You utilize everything you can to make sure your message and what your investment mandate is known in the market, because you never know when those deals will come up. So,
Aaron, we have one ask from the audience, and this is about the prior question.
okay.
The ask was, which apps are you talking about for tracking and following up of meetings?
Yeah, good question. So it's our Deal Midas has an app. So our actual CRM, and so I have an app on my phone as well as functionality on my PC.
Thanks, Aaron.
Yep.
All right, we're gonna open the floor now to audience Q&A. I will moderate, but feel free to drop in any questions for our panelists.
Alex, I just assume the audience is stunned with all the information you got.
I'll take it.
Nevin, I'll throw one in for you. We touched on it briefly, but this revenue estimation kind of dimension. You want to speak a little bit to that and how it can happen, how it can be done?
Yeah, I can talk a little bit about the science of it. And this is like the question everyone wants to know. You want to know, when you're talking to a company, when you're approaching a company, do they have scale? Do they have traction? What's their valuation expectation? You want to know this because this can determine whether the company is disqualified right at the beginning. If you think a company has 10 million in revenue and they have 0, that could change the difference, change the way that you underwrite the deal, the thesis, what you bring to your board. Now, the science behind it is we've looked at a lot of data around what correlates from the outside into revenue. We've looked at proxies like headcount, locations, funding, web traffic, square footage, you name it. There's many different proxies. And what you can actually do is you can bring this back to an industry by industry basis. So for example, digitally native e-commerce businesses, may not map as well to headcount because they are based on the amount of visitors that visit the site. Or manufacturing industries are more related to square footage because it depends on the size of their facilities, how much revenue they can generate. Or professional services is mostly related to headcount, say like lawyers, a law firm. They're going to be able to bill the max of how many legal staff they have and how many attorneys they have. So that's what you would think intuitively. But when you actually peel back the data and you actually look at the correlation between these different data points, they're all highly correlated with, guess, headcount. And that's what most firms, and Aaron and Alex talked about headcount as one of their key indicators. Because go back to that example of a manufacturing business, while there may not be as closely linked to headcount, there may be a different multiple that's applied. Because if you have a larger factory or a larger facility, you need more staff to actually manage that facility. You need more site managers. So therefore, it's less of a one-to-one correlation that you have in, say, professional services. And there's a spectrum, but we find among our users and the folks that we talk to that if you get the multiple right, headcount can be one of the best ways to size a company. But it all comes down, again, everyone speaks multiples for valuations, similar with headcount. All right, so we have a couple of questions from the audience now. So this question is, we struggle with getting the business to think of inorganic growth. It's usually mandated from executives. BUs want to grow organically. What's a good way to educate our teams internally? Example, inorganic growth goals.
So something we've done at Progress to educate the business units on inorganic is we had an M&A seminar. So basically, we put together a deck and an hour-long presentation explaining the benefits of M&A and also just educating them about the M&A process. Because a lot of these employees are not familiar at all. They're technologists, they're marketing, they're in sales, or in human resources. They've never worked on an M&A opportunity before. So putting together this seminar was very valuable in educating these individuals. The other thing we do is sometimes we'll work with the thought leaders on brainstorming themes for M&A. So usually we'll put a meeting together where we ask everyone to come with an idea or two, and then we all share our ideas, and then just kind of think through them, work through it together. And then hopefully we leave that meeting with one or two really solid ideas that then the corporate development team and our third-party firms go out searching for companies in those areas.
Yeah, this is probably better for Alex to answer, but maybe one relevant story about how we think about things. So we're often buying kind of non-core business units from larger entities, right? And many of them have not been focused on inorganic growth. So one of our key aspects is growing the business inorganically through add-ons, et cetera. It's usually sometimes a change of realigning compensation incentives, right, to think about inorganic growth, and candidly just having one-on-one conversations, right, whether it's a town hall once we own the business, with the new management teams, but sometimes it's a realignment of incentives to start thinking about inorganic growth and then how that will affect their business, et cetera. So that's just one thing we've done.
Yeah, I think it's a great question because there's always a question internally of buy, build, partner, what do we do? And as Corp Dev, you're the advocate for M&A and inorganic strategy. So the next question from the audience is, how do you manage process? Much origination seems manual. How do you automate it? Do you manage it like a sales outreach quota?
Yeah, I think for us, back to my comments about how we manage our CRM and capturing that data, years ago, we realized that the more data you capture, the more you can utilize and cut it up and then figure out how to manage it. So for us, we try to capture as much as we can. Like I said, everything from specific deal data, sourcing data, and then also how it hits the funnel and where it hits the funnel. Because when you overlap those three buckets, then I can start to manage it, right? We can look back and say, we're really effective. All of our LOIs look like this complexity. How do we go and replicate that, right? Or these deals were really down the funnel. These were the types of outreach that we were really successful with. So we do kind of manage it, not necessarily like a quota, but we have internal goals and KPIs on outreach because in order to have that larger end of the funnel at the top of the funnel, you have to manage KPIs almost like it is a sales outreach. But again, it's about capturing the data and then putting in the dashboards that we've built in order to manage that and then kind of reverse engineer how we have our outreach going forward.
Yeah, I think the thing I'd add is, you're probably right in that it is highly manual. We're not automating a ton of it. We do have a KPI around building pipeline, and that's to add roughly 50 companies of pipeline to our database every quarter. So from a manual perspective, that's pretty doable. We don't feel necessarily the need to automate it. We focus more on, I would say, really high quality pipeline where we really know each of these companies moderately well and have given a lot of thought to them, rather than sending out, automated mass mailers or anything like that. Yeah.
Thank you. All right, the next one is, question is, have you found corp dev teams find success having a single owner for deal sourcing technology the org uses, i.e. making sure it's being utilized by the right people and in the right ways? Or does it tend to be more decentralized?
I would say that, at least in my experience of progress, everyone on our corporate development team has access to our Deal Cloud instance, our CRM. And so everyone's kind of, in the same boat, working together, adding companies, adding notes, adding, the results of outreach and various conversations. It's no one's individual responsibility to do any of this, but it's all of our collective responsibility. And so that's how we run it.
Do you have one system administrator, or who signs the checks then?
Our finance team, so that the checks would come from our procurement team. No, I really do believe we all have pretty equal ownership of it. And, we have various customer success managers and things at Deal Cloud that we work with, and we, all work together on building out the platform to be so that it works best for all of us. But we work on it together.
Yeah, we're the same. It's all decentralized. Every license, each individual person has a license. You can add data, pull data, et cetera, which makes it really nice because it's all real time. If my colleague had a conversation with Alex 3 minutes ago and I just happen to have a call, or you ran into somebody, all that data is live. If they're entering it, it's nice that we can all see it, even if it's coming from a different license. So that's one of the beauties of the CRM and using multiple users, is it's all kind of real time data.
And then Aaron, how about the procurement piece? Again, does that sit with finance and or operations, or do you have one deputy who's works on procuring and purchasing?
Yeah, it's our BD team. I lead the team, so it's probably that falls on me, right? But it's mostly a BD function and less so on the other side of the firm. So mostly myself, but really the BD team in general.
All right, the next question is, with competition for deals being so intense, i.e. between PE and corporates, are you seeing specific strategies from corporates to win deals over PE groups?
Yeah, so one way we try and do that, besides differentiating on price, because that's very difficult at times, is we like to differentiate by building relationships with both the management team and the seller. We think that if these are sellers that really care about finding a good home for the asset, if we could demonstrate that their employees will be happy as part of our company, and that will really care for the technology and the people, that's a great way to differentiate. The other area is around speed and certainty. So we try and demonstrate that we could run a highly efficient due diligence process, that we have a limited set of requests, and that we'll be able to run that process quickly, efficiently, and with as little headache for them as possible. And then we also like to be very market and flexible on deal terms. So our legal team is M&A ready. We have great relationships with our external counsel, who we've worked on many deals with in the past, and we like to show that we could be flexible there, and we're easy to work with.
And Aaron, flipping this to you, from your portfolio side, so how do your portfolios win deals from PE platforms, or why would you lose deals to corporates?
Tricky question, right? Because we're part of the competition as well, right? But I mean, if I think about it, really the biggest advantage is the business that's being acquired. How does that business create value within the larger entity, right? For us, sometimes we can add additional capital things to really grow that business and expand growth. For a larger corporate, one of the things that's really tough for us to compete with is, how is that business going to fit in with a larger entity? If you're buying a piece of technology or a service or a product that you can slide into and have a cross sell, that's really hard for us to compete as a private equity group, right? But that's really where we win if we have an existing portfolio company and we're really angling that relationship is what is your business going to be able to do in combination with our business? We're not able to do that as a standalone sponsor, right? So we really fall short in those aspects. But when we have a portfolio company, I mean, that's usually how we angle it is how are you going to create value as a business owner? And these combinations, generically a 1 + 1 = 3 scenario. So how is your business going to really explode as part of our business?
And does that have to tie to the economics then as well of how you structure the deal to make sure that there's upside post-deal for the founder?
Sure, of course. I mean, not every founder, is interested in kind of, post-close relationships, but that's absolutely a key carrot for us.
So I have two more questions. This question was, this is a data hygiene question, but how do you manage capturing lots of valuable data with the possibility that people inputting that data have limited time and don't want to populate all the desired data?
Yeah, so I think I mentioned it earlier, but I would say that there's a really useful integration between DealCloud and PitchBook, and so that saves a ton of time. It takes a little bit of work at the beginning to set it up how you want the data to flow and put out basically into your instance and reports, but that was very helpful once we've done that, because then there's not a whole lot of data to put in, at least for us, besides unique data about personal interactions you've had with the team and files that are relevant. But I think it depends who you're working with, but just stressing the importance of M&A to the success of your business is very helpful and important.
Do you have any required fields, or do you have any checks and balances to make sure that certain fields are filled out before a deal progresses?
We do. I mean, the required fields are like the company name and the link to actually PitchBook to pull the data, where the deal came from, when the date of when the deal was created. But other than that, none are required in our DealCloud.
Yeah, two quick answers to that. One from a managing my team's perspective and making sure other folks have kind of the level of urgency and understanding of the data and the importance of the data. Part of it's just coaching, right? Making sure that I pull relevant reports and showing how all of the data flows through. So my team sees, hey, look, this is important because, Aaron manages these aspects of our business development function, and this falls short if we don't do X, Y, Z. So, it's a part coaching and then part pulling the right reports and showing how it all flows through and how, my decisions as a manager are made. I think that's helpful from a visibility perspective. And then two, candidly, it's how do you minimize the manual upload, right? So one of the things we were able to do with Deal Midas is my team goes out and has campaigns to make calls or reach out to certain specific groups. Instead of opening up Deal Midas, opening up each module, making different button clicks, et cetera, we created a bespoke upload. So they can go through and make 100 calls if they want to in a day and quickly just have it in a spreadsheet that we've built that batch uploads everything. So we can actually batch upload, contacts, relationships, meetings, you name it, honestly in the thousands pretty quickly. So having that batch upload function has been really key for us as well. So whatever you need to do to minimize that manual aspect certainly helps, but again, I think that's part and parcel with coaching the importance and having that visibility of why we do these things.
Great. Looks like we've got time for one last question. This question is about what DD platforms are being used, if at all, any benchmark data on management team or company performance other than conventional KPIs.
So I would say we wouldn't necessarily have a DD platform. We just use Microsoft SharePoint, and for every deal, we build what we call the DD hub for that particular deal. Every functional due diligence team has a folder there, and we bring materials that may have been in the VDR, may not have been, that we just received earlier in the process, and we put them in their respective folders so they have that. As those due diligence teams progress during diligence, they'll use that folder as sort of a central repository for their materials as they work through the process. And then we'll just upload things that are shared resources for the entire team to that hub. Things like the SIM, our due diligence readout slides are up there, various financial packs that the bankers may send. And so that's kind of the tool that we've been using to manage the DD process.
Yeah, I know we're out of time, but my quick answer is our team uses Modaxo. So we have an operating partner who kind of leads that. He's our PMO. Everything from when we source the deal, we use Modaxo as that repository, right? So we track all the information, and as it progresses after EOI and the diligence, each functional team then uses that and adds the data. So Modaxo is what we've been using.
Awesome. Well, we're just out of time now, and we're coming to the top of the hour, so I'll let Ludwig wrap it up.
Yep. Thanks so much, Alex and Aaron and Nevin for all of that. Really appreciate it. Thank you to the audience for all your good questions. In case you missed it in the Q&A down there, for anyone who wants to learn a little bit more about Grata specifically, encourage you to email phil@grata.com. So that's phil@grata.com, and Phil can answer any of your other questions about the tool specifically. But again, thanks so much for everybody for joining, and really appreciate all the time and effort and good questions.
Thank you all. Have a good evening.
Thanks, everybody.
Right.